spike and channel down, and the channel down had a wedge shape. The odds were very high that today would trade below yesterday's low, not because of the 5-minute chart, but because of the daily chart. On the daily chart, we have a higher high, and there should be enough bears around for them to attempt to create a top, and a top normally takes 2 attempts to go below the prior day's low, and we hadn't had one yet. And with yesterday being a strong bear reversal day, it certainly is a good candidate for the bears to be able to push the bar below the low of the prior bar. Most reversals in the spider or the E-mini take a couple attempts, so there's one attempt there, second attempt. So since we hadn't had the first attempt yet, I thought it was a good chance for a first attempt. By the way, the spider in the E-mini right now is testing the high, and you can argue 2 legs up, wedge bear flag up. I'm not going to short it. Okay, first bar of the day. It's a breakout from the bear channel. It may test to the top of the channel in the 28 area. It may stall at the low of the spike down yesterday in the 27 area. To me, the trade I'm looking for is a short for a test of yesterday's low. I don't know how high we'll go here, but I'm pretty confident that no matter how high we go, we're going to go down to yesterday's low probably in the first hour. Good breakout on bar 3, excuse me, but could be climactic, and it achieved the objective of testing the top of the bear channel. It's also testing somewhere in the middle of that huge bear spike yesterday from noon. Bear reversal bar at bar 4 could be the high of the day. Could be a sell-off to the low yesterday's low. I don't think it's a good scalp. I think it's probably a 50-50 trade, but it is an okay swing. If you're risking 2 points to make 4 or 5 or 6 points, I think that's on a 50-50 bet. I think that's okay. Good looking entry bar for the bears on bar 5. The bulls tried to turn it on bar 6, making it a higher low and a breakout pullback. Remember, the open broke out above the bear channel, and this is pulling back. We had a spike up on 1, 2, 3, a spike down on 4 and 5. I think bar 5 in particular is impressive. So I think there will be sellers above the high of bar 6 if the market gets there. So I think we should be working lower. Okay, 7 and 8, or 6, 7, and 8. We see that kind of stuff all the time. A micro wedge bottom. Micro wedge bottoms usually are not major reversals, but they are scalping opportunities. 7 is 2 ticks below 6. 8 is 2 ticks below 7. So there will be traders out there who are aware of this situation, and they think, okay, maybe 9 will go 2 ticks below 8, but if it goes 2 ticks below, it probably shouldn't go 5 ticks below. So they'll try to buy maybe 1 tick below, just in case it only goes 2 ticks below, and maybe use a 4 tick stop for a scalp up from 1 point, and it's a pretty good risk-reward trade. And those bulls were able to get that scalp. Once the micro wedge has 4 bars, I don't try to do it on the 5th one. The 5th one here is bar 10, and it broke out to the downside. What about shorting below it? The minimum target is below yesterday's low, and it's just 3 ticks lower. On the other hand, you could argue it's a breakout, so it may get some kind of measured move down from the height of the micro wedge. Bar reversal on 11 and 12. Let me just say, I would not buy above 11. You can say, Al, it reversed up from yesterday's low, and it's an expanding triangle with bars 72 and 81 from yesterday. The sell-off here today is too steep, and I think it looks like it should have more down, and I'm not going to buy the first reversal from a steep bear channel. And also, I think this is a 2-bar reversal, not a 1-bar reversal. And even the 2-bar reversal, 11-12, I still wouldn't buy it because the channel down is too hard. Low 1 short, below 12. A lot of times I don't take them if there's too much overlap and if the spike down isn't all that strong. This is one I should have taken simply because of the breakout, the bar 11 the bar 10 breakout, it should have 2 pushes down. Good looking reversal bar on bar 15. Sell climax 13-14, sell climax 10-11, sell climax 4-5, expanding triangle. We're at the trend channel line. This could be the low of the next couple hours. It should be at least a low that would lead to a test of the 23 high, the top of the channel from the 9, 10, 11 spike area. You're trading counter trend, so there's a very good chance there'll be pullbacks. In other words, low 1 shorts, low 2 shorts. However, this should go up at least a couple points, and I think there'll be buyers below the lows of the bar. Okay, bar 16, a weak looking entry bar. Bar 17 went outside up. I mentioned that a lot of times when you have a good looking reversal bar and a bear, such as bar 15, and then you get a small entry bar, a lot of times it sets up a bear flag, like we had yesterday at bar 68 and 69. But the context here is different. That was right after an initial bear spike. This is after several bear spikes. It's the 3rd sell climax, and it's a really good reversal from yesterday's low, expanding triangle. So it's got a bunch of stuff going on here. I didn't even check if it was a leg 1 equals leg 2, but it might be. So there's leg 1. Not really close to leg 1, leg 2. But anyway, I thought that this would go up at least a couple points. 17 went outside up, and it's closed on its high. So a lot of times the trend of the day begins in the first hour or so with an outside up bar. The bear trend begins sometimes with an outside down bar. To me, it's strong enough to reset the count, so I think the trend began at the bottom of 17 rather than the bottom of 15, or at least for counting purposes, I would say that the move up began at the 17 low. Okay, follow through on 18. Traders were trying to buy a failed low 2 at the 18 low, and they weren't able to. The market, too many limit orders at the low and 1 tick above the low of 18, so the market could not get below it. Moving average shorts at the moving average on 20, so they're in at 12.23. I said that I personally would not take that, but I would consider shorting higher, and I definitely wouldn't short below 21 as a low 2 or as a low 1. I was buying at and below the lows of bars, and I usually tend to do that when I think the low 1s and low 2s are bad. Okay, 23 is not good for the bulls. It's a breakout pullback, but a doji bar, so I think there probably will be sellers above. I personally would not sell above there because I think always in just went long a few minutes ago, so I think there's more up. So I'm only looking to buy below bars. We have a high 2 set up at 25 and 26 doji bar. Little barbed wire going on for about 6 bars. Again, I'm buying below bars, not on stops above bars at this point. But the trend is strong, and the market didn't care. 27, 28, very strong bars. They opened on their low, no tail on the top of 28. So it looks like this reaffirms the always in up, do a kind of follow through we get.